thank you guys all very much for making it out. Very excited to have everybody out here, and with very high quality guests joining me on the panel. So today we're talking about crypto market making and the maturation of digital assets. I know many of us have been in the space for a while and seen it change quite a bit over the years. So just kind of wanted to go over some of what you've seen and some of what you'll expect to see, and yeah. So we have some very traditional people here from traditional markets, traditional finance backgrounds, and then some more crypto native firms. So I think one of the things that I'm most interested in hearing is, as if you're looking to kind of go into the crypto space, what are the trade-offs or the benefits and drawbacks for a large traditional finance trading firm of doing it themselves versus kind of like spinning off their own own crypto native firm to trade?
You want me to lead off?
Sure.
So at Susquehanna, we have 2,400 employees globally. Probably half of them, broadly defined, are technology. So when you're building out stuff, we have a lot of resources that are very specific that we can build tools with, and so that's clearly an advantage. I would say that sometimes you have existing trading software or algos or just stuff that solves problems that you try to jerry-rig into fixing a crypto problem, and you spend a lot of time and resources trying to do that, and then you find out that it's just not going to work. And so in a lot of cases, you look back at these solutions that are new, and you find out you're probably better off in some cases starting with a clean slate rather than having existing stuff that you try to re-implement into crypto.
Yeah, I think that's fair. I mean, I think you get the benefits of existing infrastructure to some extent from some of the stuff is already built. But some of that infrastructure is also your legal team, your compliance team, you have capital, all the things that you sort of need to start up an operation like this. But I think some of the drawbacks you arrive at is, I think those of us on the principal or proprietary trading side, a little bit easier for us to make that decision to enter into the marketplace, right? And so I think as you skew to larger asset managers, banks, it becomes a little harder to necessarily do that. And so I think the other thing we also have the ability to do is, I think as a global trading firm, we've entered a number of different markets. And so we have a number of different entities that we use to facilitate that, and that becomes a little bit easier. We have expertise, and you can sort of avoid some of the regulatory uncertainty by sort of using structures that we're already familiar with.
Yeah, I think it's what's interesting for me is if you look at traditional trading firms, they all, a lot of them have been traumatized, for lack of a better word, by certain events in the past, like on the technology side of things, if you look at night trading, for example, or on the regulatory side of things. And so they had to build certain frameworks inside so it doesn't happen again. And those frameworks made them resilient, those frameworks made them successful.
Test.
No, it came back.
Yeah? Okay,
yeah.
Perfect. Yeah, so those frameworks make them successful beyond, their wildest dreams sometimes, but they also made them very much not flexible enough to expand into crypto. And so, for example, when I started Wintermute 5 years ago, some stuff that, I was working at Optiver before, and so some things I had to adopt on the risk management side, on basically how to handle certain compliance things. But certain things you just need to adapt because crypto is just much, much harder and you have to be much more flexible. And so this DNA, you have to change this DNA in order to properly interact with crypto.
Yeah, I think that there's obviously trade-offs that were kind of outlined. I think on net, you end up having some kind of structural advantages coming in from a massive global proprietary environment. Outside of just kind of the execution software itself that, you can't always successfully jerry-rig into interacting with exchanges that now live connecting over the internet and are cloud-hosted and all these other kinds of heavy idiosyncrasies like API key problems and things of that sort. But independent of that, the trading problem kind of spans a lot of different buckets, right? And you start with your whole machine learning environment, your whole data archive environment, the regulatory landscape, the capital that you come with, and all the trading intelligence and tooling that you've built over the years that really adds a lot of structural edge. And all those kind of pieces, when you can marry them with more native execution environment that you can create, I think creates a pretty competitive offering.
Yeah, and kind of to what Evgeny said, I do think the flexibility, the nimbleness of crypto native firms does give them a lot of advantage. Like, when DeFi came out, all of a sudden there's a ton of money to be made on decentralized exchanges that like you kind of had to be able to move pretty quickly to take advantage of, and it's kind of hard for a larger firm to do that. But the resources side of the traditional companies, I imagine, would be quite nice.
The grass is always greener on certain days. So.
For sure. And then, do you think that, as we continue to grow, we haven't really seen a lot of acquisitions from traditional finance firms picking up crypto trading firms, or even vice versa? Do you think we'll start to see more of that? Do you think the larger companies all just kind of try and build the crypto trading in-house?
So we've seen some acquisitions with BTC2 and SBI, and maybe a couple others in the space with folks raising money. I think it's kind of really tricky to think reason about valuations in this space, because a lot of the more native trading environments, Wintermute included, do a lot more than trading. They're building products. They're kind of structuring economics that are different to think about. And in acquiring IP that's relevant to trading, or knowledge that's relevant to trading more broadly in the crypto environments, you end up picking up a whole bunch of other stuff that you may not be comfortable on the regulatory side with, but two, also don't know how to value well. And so when you have a truly breakout firm like in the mold of Wintermute or others, I would find it difficult to think about how an acquisition would play out. And I'm sure Evgeny has.
Yeah, I think it would be hard. Like, I don't think we'll see a lot of. I'm just unlucky, I guess. I don't think we'll see a lot of acquisitions on horizontal side of things, but it's more. It will be much more on the vertical side of things. I'll just try to talk. not slightly myself.
And I guess the opportunities don't solely exist just on the trading firm side of things. Like the exchange side, that's a major piece of infrastructure, and obviously the traditional finance exchanges have had a lot more time to kind of build out their tech stack and make things a lot lower latency and things like that. Do you think we'll start to see crypto exchanges either buy out native or TradFi exchanges, like get some of that tech, or vice versa? Do you think crypto exchanges will be acquired by traditional finance firms looking to add crypto trading to it?
Yeah, I mean, you've seen it already, right? I mean, because FTX bought LedgerX, right? And then you had Coinbase bought FairX most recently, and Cboe, which is a traditional firm, bought ErisX, right? And so you're already starting to see that. I think I think what you'll see is both crypto native and traditional firms acquiring upstart firms. And you want to call them crypto native, but they'll be upstart. Like, I just don't think that many crypto firms are going to find established exchanges that are very attractive to acquire. I think a lot of their offerings are going to be ancillary and not very terribly interesting, and that they're going to be bloated, right? They're crazy mature companies, and so I think that what you'll continue to see is these bolt-on acquisitions where okay, I need an NFT trading platform alongside of my spot. I need derivatives alongside my spot. As sports trading becomes more of a thing in the United States, I'm going to need a sports trading solution. And so you're going to need this cohesive, holistic platform that you're going to compete in the regulated space. And I think in the derivative space, that's where the fight's really going to be. It's going to be super interesting to see Coinbase and FTX US fight it out with Cboe and NYSE in the future space and in the option space, because I think that's where the institutional money comes in. Pensions, endowments, foundations, asset managers, that's the pie. And so that's the part that I'm kind of interested to watch unfold.
Yeah, in 2017, we were sitting around thinking, when is someone like NASDAQ going to buy Coinbase? And 2 years later, it was, when is Coinbase going to buy NASDAQ?
Yeah.
And, right here we stand, I think they're both around $30 billion companies. And, FTX, if it were to go public, I think would be multiples of that, right? And I think we'll see that continue to grow. So I agree with Bart. You're going to see both traditional and sort of crypto firms pick up additional sort of crypto resources, crypto firms, crypto infrastructure, whatever it is. I think the other thing you're going to see too is less from an M&A perspective, but more from an operational perspective. I think you're going to start to see some of the things that make crypto unique, 24/7 trading, things like that, start to bleed in traditional markets as well. And I think that's going to be whether they do that by regulation, whether they do it just through sort of changing business model, or whether they do it through acquisition, I think both of those things are interesting and going to happen.
And do you think we'll see some of the existing infrastructure in traditional finance start to bleed more into crypto? Like breaking down the life cycle of a trade between custody, execution, clearing. Do you think we'll see that in crypto, or do you think it'll kind of try to maintain the setup that it currently has?
You're seeing it, right? Like there's great companies that are crypto native that are trying to recreate the infrastructure of traditional finance, right? And it's interesting because like if there's like 14 different like verticals in traditional finance, you need like fixed line providers and custodians, and you need like trading software. A lot of these crypto native firms are offering like many of them. And you're seeing them, where they might have like competitive offerings, but their core competencies are complementary to other companies, and like those companies kind of become frenemies. They kind of work together. And so I think that for the crypto native people there now, like there's great offerings to solve for those. In traditional, again, like an insurance company is just not gonna onboard them right now. It's brutal. It's hard to imagine them onboarding any number of these awesome companies, and that's why we follow the State Street and BNY custody solutions so closely, because the existing infrastructure of traditional finance, like that's what they want to use. They want to use the rails they've already built, and that along with like a pretty opaque regulatory environment has really kind of kept the buy side at bay. So I think the stuff that's being built in native is awesome. And maybe it takes so long for the traditional world to catch up that they get enough establishment that they can fight for that. But like right now, it doesn't feel like it. I don't know if you feel different.
My hope here definitely, and a lot of the momentum we've seen, especially from FTX and Coinbase as well, has been in folks kind of building global trading environments in the crypto stack, learning what an integrated solution could look like, and then looking at what we have in the US and being like, why does it suck, right? And how can we kind of reason about how it gets better? And so all the new proposals that are out in the automatic deleveraging of things to get additional leverage on physically settled Bitcoin, on rethinking how, what the waterfall of fallbacks looks like, do you deliver positions or P&L, and does it ultimately get backed by the equity of the entity? And all these kinds of considerations have been not even pondered, I'd say, for the longest time. And when extremely well-funded $40 billion companies are now coming in with kind of heft across regulatory technology, institutional liquidity, at least the optimist in me says we're likely to see some of it bleed the other way.
Yeah, the fact that crypto is adopted by retail before institutions, right, has led to sort of some interesting market structure components where, the exchange is the broker, is the clearinghouse, is the custodian, and sort of to Bart's earlier point, like that assimilated model doesn't work for a traditional institution, and it's something that frankly we had to get comfortable with as well. And there's friction associated with that in terms of cost of capital. That you'd like to sort of avoid. Everything having to be pre-funded is sort of a pain as well. And so again, I think that some of the benefits that there are some sort of financial benefits that go along with all of that, though, just in terms of cost of custody and everything else, sort of wrapped up into one solution. But it also is sort of painful as a trader, like not to be able to be like short on FTX and long on Coinbase. And even though I'm net flat, like I've had to deploy both USD or UST and Bitcoin on both environments in order to facilitate that. So we're even seeing some, I think FTX partnered with Copper, right, to do some sort of native settlement across a number of exchanges. I think those type of infrastructure plays are going to be sort of meaningful benefits to firms like ourselves and others who enter the space.
I just want to also kind of articulate that a little bit further as well, and caveat my point here, in that not all intermediaries are bad. Clearly some add value. And I just hope, and I kind of think directionally where we're headed is in re-examining what stack of intermediaries we need and which ones are actually value accretive versus not.
Right.
And the point that you made about it starting with retail, like I think people forget now that the ETF was like highly criticized for a long time, and particularly by the institutional world, and that there were these cataclysmic events that were going to happen because the structure was going to break, and the creation and redemption mechanism had flaws, and there was a lot of FUD, and it was because traditional 40 Act funds wanted to charge 150 basis points for large cap US equity, and these solutions came in that created, better counterparty risk and more transparency and competition and price compression and all of these things that were benefits to the existing trading, world. And now we forget all that. And I think there's going to be a lot of corollaries to crypto. Like, you're just going to, what's the point of having an FCM if all of a sudden the FCMs go under because the zinc or copper market's going to go under and we just have to cancel a bunch of trades? Like, what's the point of having someone there to manage your collateral if they're the person who's supposed to stand in the middle and then we're protecting them? So these innovations that are happening within crypto, that's really good. Even if you don't like crypto but you like the regulated markets, there's going to be benefits that come out of this innovation that just wouldn't happen because no one's challenged it for 50 years.
Yeah, and I think a lot of the benefits that you see on crypto exchanges today, the traditional players are going to have to want that at some point. After hours trading, being able to trade on the weekends. There is a lot of benefits that crypto has brought to, at least crypto markets. FTX has our tokenized stock products for doing equities. It's obviously a small market, but eventually I think the market will have to move that direction for traditional assets as well.
Yeah, think about how many volatility events happen around the open and the close, right? And how many of those things over the weekend, credit, risks over the weekend from massive movements and macro moves that just get smoothed out by a different model. So not to say that it's perfect, but
in January of last year when everything was going on with GameStop and AMC and everything, the markets were all over the place, and then it's just 2 days out of the week, it's just no, never mind, we're just going to rest today. It's kind of it's odd. And both of you or all of you have plenty of experience interacting directly with crypto exchanges, interacting with traditional markets. Just from your perspective, what do you think what do you prefer? Trading on traditional markets or on crypto markets?
Yeah,
on exchanges, sorry.
Exchanges. Yeah, I would say for me it would be crypto exchanges for sure. If I look, I've been kind of very loyal customer of Kraken, sorry, for a very long time. Primarily because I'm just lazy to onboard some.
Wait, there's more than one exchange?
Yeah.
But overall, it's just this 24/7 aspect is just very appealing. You log into Robinhood or wherever, and you cannot buy things on Easter break or sell things on Easter break when all shit hit the fan. It sucks. But at the same time, if not centralized exchange, when I want an extra thrill or I just want to, invest into something that's not available anymore, I also like to try DeFi as well. I think it's really interesting to try it out. I'll definitely recommend anyone in this room who, for some reason, haven't tried it yet to check it out. And I think that would be the future that I would be personally really interested to build, so that we have this frictionless experience where we can trade permissionless effectively.
I mean, what I would say from a sanity and usability perspective, there's a benefit to trading on traditional equities, futures markets. They have a test system you could use.
Cancel on disconnect. Why would you ever want that?
Right, features. They have somebody you can call if there's any issues, and so those are useful from a service perspective. But I think that what that highlights is also they're well established, right? And the technology problems and requirements that they have are vastly different than the technology sort of requirements that a crypto exchange necessarily has. And that goes back to that you're the broker and the exchange, and so they need to service firms like ourselves. They need to and they also need to service Brad Vopney, the individual client who put a couple of bucks on. Well, I can't do FTX because I'm in New York, but some other place like that. So. I think what I would love to see develop in the crypto exchange space is a little bit more standardization. That would be great, but just the ability to test things a little bit more frequently. But what I also don't want to give up is the ability for crypto exchanges to innovate, deploy, and productize things immediately. And I think that for the most part, like I think we've all learned how to deal with all of that, right? And you have to be a little nimble. You have to sort of culturally be aware that things are going to break, things are going to work perfectly. And again, going back to like Bart's earlier point, like that doesn't fit great within sort of the traditional paradigm of like, there's rollouts a number of times a year. There's a UAT beforehand, and I very much appreciate that approach. But also, it's hard to sort of build and disrupt and do all the sorts of things that I think the crypto exchanges have done a fantastic job doing over the last sort of 4 to 5 years.
And I've worked at 3 of the largest exchanges in crypto: OKX, Bitfinex, FTX, and also been on the exchange or on the market making side. And like one thing that was always a big pain in the ass is, especially back in 2014, 2015, but like every exchange had a completely independent API that was completely different than any of the others. So like there was a huge hurdle just to getting connected to a new exchange. You'd be like, why do you do it this way? And I don't know, just kind of thought it was right. Like there's 2 major exchanges in crypto, FTX and Coinbase, that have like a standardized fixed spec for their API. Like
Gemini's on that list too, I think. Gemini's on that list.
Oh yes, yeah,
That's worse.
yeah.
Yeah, but it's also interesting like where it all will go eventually, because like none of the customers like log into NYSE website to trade there.
Right.
Like NYSE is not, creating a nice UI experience for their users. Well, every single exchange is working on their own thing. So to me, it's interesting. Okay, will people go to FTX, for instance, and trade in 5 years' time, or will be all aggregated on one level, where this UI experience will not be as interesting, as important anymore?
Yeah. Trading on CME is pretty easy for us. We've been doing it for quite a while.
Right.
There's obviously probably more opportunity for us to provide liquidity on some of the other platforms. We've been doing this, for a number of years. Like a lot of these problems were really much worse in 2017 and 2018. Like they were brutal.
Yep.
And as I talked about, these infrastructure native companies that are coming in and working together to recreate that network are making that a lot better. So it becomes less of a native crypto exchange that I'm trying to set up an API with, and it's not even in Python. They're like, oh, can you code in Rust? And we're like, no, we don't have any codes in Rust. So that a lot of that stuff's been worked out by these intermediaries. But it's getting better, and so the opportunity is better on native, and trading, on the New York Stock Exchange for Jump and for Susquehanna and other companies, they're pretty easy.
Evgeny, one thing that you mentioned that I guess it's one step further than a crypto native exchange is a decentralized exchange. You were just talking about like your ability to get something even if it's not listed elsewhere. I'll say I was pretty staunchly against DEXs for the most part, and I really didn't see them challenging centralized exchanges ever. But then like in the ICO boom and then during this latest one with farming, their speed on just getting assets listed was a huge benefit. People could just go right to the DEX and buy any shitcoin they want, and they got a ton of volume from that. All right, one other thing that we're talking about pain in crypto is the funding aspect of it. So I'm curious, like, where you guys see the PB setup getting in crypto. Like, we have a couple people that are trying it, or a couple different firms that are trying it right now, but like to date, the PB offerings have been piss poor. Do you see infrastructure like that playing a bigger part in the crypto space over the next, let's say, 3 to 5 years?
Yeah, I mean that's the biggest difficulty in the regulatory world, right? So like Susquehanna, we have a regulated broker dealer for digital currency trading, and we're one of the few. I don't even know how many there are, but just like the capital requirements to transact in there, it's just the netting. It's like it's almost impossible. It's just not efficient and certainly not profitable. So like that, having prime brokerage solutions is one facet of it, but it's really just being able to get the collateralization to something reasonable, and getting, clarity on, cross agency, rules. And so it's the same stuff, really. It's like 2018. I'm sad to say, but getting a traditional prime broker who can actually cross margin and give you a collateralization rate that isn't economically unviable, that's the stuff that we haven't really seen a lot of movement on. And if I was I'm so bullish on so many facets of the ecosystem, but that's the one that's really been disappointing. Melt talked about it in the previous panel. Like it's time for us to like we got to go to people that matter in Washington and just tell them, like, look where this conference is. Like, why is this conference here, right? Like, there was a country in the middle of the Caribbean who said, like, I'm going to have a clear, constructive, DARE registration that's going to say, like, what the rules of the road are, and then boom, you have 1,000 people here talking about crypto. Like, that to me is like the most disappointing thing. So, I don't know.
Yeah, I think the PBP. I think the
You're
PBP.
sad to be here? Is that what you're saying?
Yeah, I just say that. So I'm just trying not to get sunburned. I'm not built for this. Neither are you.
Yeah. No, I think, like you said, the BB piece has definitely been one of the white whales of the industry that I think no one's really been able to hook onto yet. And as much as we're all hoping for upstarts in this space to come and disrupt a lot of that, this is one of those things that's probably going to have to be a State Street or somebody with a lot of money that everybody can trust. And they're going to have to work through all the regulatory stuff on their end to make it happen. And that's just a matter of going to Washington. So.
Yeah.
Yeah, I mean, it's a balance sheet issue, right? And, I think we've seen, the issue is, this goes back to the earlier point, like, with the exchanges doing so many separate things, right, or sort of servicing so many separate parts of that sort of traditionally disintermediated ecosystem, right? Like, they're offering sort of PB-like solutions, but only for their particular exchange, right? And so, like, again, like, that's very useful, but like the amount of time and energy and effort and sort of, the cost benefit analysis for us is like, that's a ton of work for, very little benefit on a per exchange basis. But yes, across the ecosystem would be tremendously helpful. I mean, the other thing that I thought you might mention is, funding just the treasury aspect of, sending capital and moving coin around is its own kind of really hard problem to solve. That's a thing that I would actually love to see, like, exchanges make progress on, is have the ability to, like, not every person necessarily who logs into the platform be a super user, and start to, like, be able to segregate sort of user types that you can have, some checks and balances and people, and give a lot more access to everybody. Because the minute somebody gets access, like, not only can they make and destroy API keys, like, they can sort of move crypto around. And so there's a lot of stuff that can be done that I think would sort of make that much easier for firms like ourselves and others going into the space that, like, we've seen firms, build up out of scratch to sort of solve some of those sort of money movement and funding needs.
And not to call out any specific prime brokers by name, but, like, how many of them would you trust to move your crypto? Like, that's the thing. It's like, if my broker dealer sends my Google stock to the wrong, ISIN, ID, like, I'm getting that back, So those types of, like, fail-safe security solutions that are seriously lacking in the traditional markets, and, like, I don't see anyone stepping up to fill that void.
And just like in speaking with clients about, do you use or interested in using this custodian, or like facing, this company who's trying to build a PB, one that several people have mentioned is, like, essentially I'm just changing my counterparty risk from FTX to this smaller crypto company. So, like, while they might have a license or they might have that, like, it really isn't giving me that big of a benefit versus just, holding my funds with you and hoping that works. And so, yeah, I do think we'll have to see somebody that has just already that standing and that confidence from trading firms kind of roll that out. I think that would be very helpful. And then also on the custody side, do you think we'll start to see more breakdowns from custody to the exchange, where you're holding it with custodians and trading on exchanges? You can trade on any of the exchanges like Binance, Coinbase, FTX, all plug into the same one. Or do you think it'll kind of remain fractured in that sense?
I certainly hope so. I think it's a conversation I think we've probably had, and a conversation I have with other exchanges that on which we deal as well. I think that custody isn't sort of a critical app anymore, right? Like, it's sort of a problem that's been solved. And so I do, like, both appreciate that, like, when you get to custody this, maybe you can stake it. And so, like, there's a number of other sort of revenue streams that, like, the exchange can necessarily get as a function of that. But also it just goes back to, like, the cost, to pre-collateralize everything and put it on the exchange. And you mentioned counterparty risk. I mean, we were about to start trading crypto in 2013. We had, like, built a feed handler to Mt. Gox. And before we started trading, they lost all the Bitcoins. And what do you do when, like, how do you handle counterparty risk, right, when that can happen? And I think that's still a thing that, like, we, as part of our sort of, you know, general, I would say ethos, but like something that sticks with us is sort of thinking about counterparty risk on a continual basis, because we've seen issues where places are hacked from externally. We've seen, you know, funds get stolen internally. It was 2 years ago we had one of the larger exchanges just not allow withdrawals for about 6 weeks or so. And so, like, you know, I think what I'm hopeful for is that, yes, there starts to be, you know, some custodial provider that starts to, you know, wear this risk and provides a valuable service and also allows us to, like, net some of these trades across platforms. And it's a hard thing because, like, we'd like for that to happen, but I can appreciate that there's, like, a revenue stream associated with the exchange, and none of them have necessarily wanted to sort of give up that flexibility just yet. So I don't know where it starts, I just know where it ends.
And one other, you know, way that you can kind of make things more capital efficient is through OTC trading, right? You don't have to pre-fund, you can do post-trade settlement. It obviously comes with other drawbacks. But we've already seen, you know, the OTC space change quite a bit, and there's, you know, firms like B2C2 that were acquired by SBI pretty much to do the crypto OTC desk. We have firms like Wintermute that is rolling out an OTC portal, and firms like Jump that are kind of slowed down on the OTC side. Do you think we'll see more and more volume going, you know, leaving exchanges and going into OTC? Do you think we'll see, like, consolidation among the OTC desks or more expansion as it kind of grows?
Yeah, I think, well, first of all, OTC is a pretty wide umbrella of things. It's like you have, I don't know, crypto whales, you have family offices, you have pension funds, and you have counterparties like Robinhood, who can also be pretty much considered to be OTC counterparties. And so I think it will be, I basically hope that, like, a lot of the smaller counterparties that we face and, like, a lot of our competitors face will slowly move their volumes into centralized exchanges or decentralized exchanges. But for example, for a big holder of, I don't know, top 10 token who wants to liquidate, I don't know, 100 million of it, the second he moves those tokens to, well, some wallet, the whole market's going to know what's going on. And that's kind of a challenge that's not going to go away, and that's a challenge that, yeah, the OTC infrastructure will have to solve. Yes, and it's, like, would be quite interesting to solve it.
Yeah, a lot of it's just footprint, right? Like, the OTC benefit is just masking your footprint, and I think it's probably more like high yield, right? And then you've seen the electronification in high yield. You've certainly seen it in equities where there aren't very many blocks, really. And even in the ETF world, where, like, billion-dollar trades go up, RFQ electronic, right? So there's an electronic system that pits, you know, Jane, Susquehanna, Citadel against each other, and it could be hundreds of millions of dollars or $1 billion, and, like, there's a trader watching that, but there's an algo making a price. And so I think you'll see in Bitcoin and Ethereum, you know, a lot more of the electronification, but then you get down into, you know, like, layer 1 protocols, and we're, you know, having the world see that transaction. If, like, you're just lifting Solana, like, every day, like, the markets will move, and so you're going to need a counterpart. You're going to want to transfer that risk to a counterparty that does that for a living. So I think the answer is, you know, it's going to be a little bit of both.
Yeah, in the traditional markets, at least on the equity side, and you've seen a lot of consolidation where one to three parties see enough of the flow in a consolidated fashion that they can almost offer better pricing than the public markets. With the intensely competitive nature in the crypto space, at least as it stands today, and the extremely global nature of it, with participants across the globe and different regulatory comforts and lots of different pools of flow. I mean, you see still significant flows on the Telegram side. You know, we've never kind of delved in that, but Wintermute sees a lot of flows on that side. We see flows kind of from the DeFi and all these different global venues. And so at least kind of our bet for now is that there is going to be enough of a dispersion of flows such that the liquid markets continue to remain like a primary source of price discovery.
Do you think some of the other large traditional finance market makers that are starting to get active and dip their toes in crypto are going to try to be active in OTC or just focus on exchange?
Without a doubt. I mean, we already saw, were to even make a public announcement on it, you know, I think everyone here on the panel works on electronic OTC market making, either on the retail side with Robinhoods, or with Telegrams, or with institutions, or with the Fidelities of the world. And so,
yeah, it's an offering you have to have, right? It's just like because you want to see everything, right? And so, like, I don't know, there are different strengths and weaknesses on this panel, right? The thing, there are trades that we would monetize really well that these guys might not, and vice versa. And so I think you're going to want to have a complete offering. But yeah, I think that it'll continue to be electronified over time.
Yeah, I mean, I remember in 2017 when I was running an OTC desk, spreads used to be super wide, everything happened on Telegram, and then Jump and Alameda came in, and just the market got blown up, and a lot of people got squeezed out. The spreads really compressed, and all of a sudden it was really hard to make the same amount of money, and people just kind of had to stop. But yeah, we've reached our time. Thank you all very much for joining and sharing your insights with us, and yeah.
Thank you.